My name is ANISAH binti MOKHTAR. In this video, I will be explaining an introduction to the sale and collection circle and what is related account and transaction to this circle. Now, let's begin. First, do you know sale and collection circle in other name is revenue and receipt circle? This circle is about sale, which is action of selling and provide goods and service to the customer. After sale, the collection of the circle involves payment collection from customer as a consideration for the good and service offered by the seller. So, overall is set of process that begin when a customer purchase good and service and end with your business receive payment in full. The collection type is either cash payment or credit payment and recorded in different accounts that I will explain in part B. As mentioned earlier, yes, sale and collection circle involve a few of accounts to be recorded to calculate the ending balance at the year end of accounting period. Now we are in part B, which is related account and transaction. There are 5 related transaction and account to sale and collection circle, which is first, sale, second, cash receipt, third, sale return and allowance, fourth, write-off of uncollectible account, 5. Estimate of bad debt expenses. First, the sale and cash receipt transaction. When buyer receive order from customer, the buyer will record the order and prepare according to quantity and type that required by the customer. After receives the order, customer will pay for the order. It should record this transaction into ledger and sale account and cash in bank account for cash sale. If it is credit sale, the account is sale account and account receivable. Next, sale return and allowance transaction occur if customer send back the order. This transaction should credit in account receivable ledger and debit in sale return account ledger due to increase in sale return. Now we move to transaction of the write-off of uncollectible account, which is refer to the process of removing a specific account receivable from the company book because it is deemed unlikely to be collected. When a customer debt is considered uncollectible, the company recognizes the loss as an expenses. The entry typically involve debit the allowance for doubtful account or bad debt expenses account and credit the account receivable or a specific customer account. Last but not least is estimate bad debt expenses account, which is referred to the amount a company anticipates as a potentially uncollectible from its account receivable. To account for this uncertainty, company create an allowance for doubtful account or bad debt reserve. This allowance is based on an estimate of the percentage of a total account receivable that is likely to become uncollectible. Now, we move to the next presenter.
Business functions, documents, and records related. Now let's take a look at the first transaction, which is sales transaction. There are 4 business functions under this transaction, which are processing customer orders, granting credit, shipping goods, and lastly, billing customers and recording sales. Document and records that are related to the sales transaction are customer order, sales order, shipping document, sales invoice, sales transaction file, sales journal and listing, account receivable master file, account receivable trial balance, and lastly, monthly statement. Next is cash receipts transaction. The business function is processing and recording cash receipts. The documents and record related under this transaction are remittance invoice, pre-listing of cash receipts transaction files, and cash receipts journal or listing. Next is sales return and allowance transaction. Its business function is processing and recording sales, return, and allowance. The document and records related are credit memo and sales and return allowance journal. Next is write-off of uncollectible accounts transaction. The business function is to write off uncollectible accounts receivable. Uncollectible account authorization from general journal is one of its document and records related to this transaction. And lastly, we will be moving on to bad debts expenses transaction. Its business function is providing bad debts, and the document and record related is general journal. Flowcharts of sales and collection cycle. Here is the example of credit sales flowchart. There are various departments involved. Starting from the order entry, the customer sales order will be compared with records from the credit department and filed in the permanent filing if approved. Next, for shipping department, the customer order will be processed for shipping and provide bill of lading to customer and also filed in the permanent file. Next is for invoicing department, is to provide invoice for customer and also to be kept in the permanent file. And lastly, accounting department, they will enter the invoice transaction in sales journal and receivable master file. This is the example of cash collection flowchart. Once the check payment has been received, it will be processed. Company will prepare the bank deposit slip to be validated by the bank and to be kept in the file. The company will prepare receipt listing and reconcile the pre-listing to remittance by entering into the cash receipts journal and account receivable master file. Company will use the updated accounts receivable master file to prepare customer statement. That will also be kept in the permanent file.
There are three essentials for sale. First, accurate is recorded sales are for shipment actually made to non-fictitious customers. Second, completeness is existing sales transactions are recorded. Third, accuracy is recorded sales are for the amount of goods shipped and are correctly billed and recorded. There are three audit objectives for sale. First, accurate is to check whether all recorded sales are for the shipment actually made to non-fictitious customers. Second, completeness is to check whether all existing sales transactions are recorded. And third, accuracy is to check whether all recorded sales are for the amount of goods shipped and are correctly billed and recorded. Next, three essentials for the cash receipt. First, accurate is recorded cash receipt are for funds actually received by the company. Second, completeness is cash receipt that recorded in the cash receipt journal. And last, posting and summarization is cash receipt are properly included in the account receivable master file and are correctly summarized. There are three audit objectives for cash receipt. First, accurate is to check whether all cash receipts are for funds actually received by the company. Second, completeness is to check whether all cash receipt is recorded in the cash receipt journal. And lastly, posting and summarization is to check whether all cash receipts are correctly included in the account receivable master file and are correctly summarized. That's all from me. Thank you.
Classification. In sales transactions are properly classified. Test of control, examine document package for internal verification. Test of substantive, examine duplicate sales invoice for proper account classification. In cash receipts transactions are properly classified. Test of control, examine evidence of internal verification. Test of substantive, examine pre-listing for proper account classification. Next, accuracy. In sales, recorded sales are for the amount of goods shipped and are correctly billed and recorded. Test of control, examine sales invoice for supporting document and examine field of batch total of initial of data control click. Test of substantive, trace entries in sales journal to sales invoice, recompute price and extension on sale invoice. In cash receipts are deposited and recorded at the amount received. Test of control, observe whether accountant reconcile bank account and examine field of batch totals of initial of data control click. Test of substantive, obtain pre-listing of cash receipt and trace amount to the cash receipt journal, testing for names, amounts and dates. Prepare proof of cash receipts. And lastly, timing. In sales are recorded on the correct dates. Test of control, account for a sequence of shipping documents. Test of substantive, compare date of recording of sale in sales journal with duplicate sale invoice and bill of lading. Cash receipt are recorded on the correct dates. Test of control observes unrecorded cash at a point in time. Test of substantive compare date of deposit per bank statement to the dates in the cash receipt journal and pre-listing of cash receipts.
Auditor should have sufficient appropriate evidence to determine whether the accounts in the revenue process, such as sales revenue, sales returns, and allowance, are presented on the financial statements in accordance with the appliance financial reporting framework. There are three possible evidence, such as the first one is the sales invoice and receipt. Auditor can examine sales invoice and corresponding receipt to verify the accuracy of recorded sales transaction. This helps ensure that sales are properly documented and the amounts recorded match the actual amounts received. The second point is bank reconciliation. Auditor often review bank reconciliation to confirm that all transactions are accurately recorded in the company's bank statements. This helps identify any description of potential fraudulent activities related to cash collection. And last one is customer confirmation. Auditor may send confirmation letters to selected customer to independently verify the accuracy of recorded sales and account receivable. This externally confirmation provides additional assurance regarding to the existence and validation of sales transaction. These evidence gathering methods help auditor assess reliability of sales and collection cycles and ensuring financial statements are free from material misstatement. There can be a lot of misstatement in the audit, but here is three possible misstatement. The first is overstated sales. A misstatement may occur when if sales are recorded at a higher amount than the actual revenue earned. This could happen due to errors, intentional manipulation, or premature recognition of sales before goods or services are delivered. Identifying and addressing this potential misstatement is crucial for ensuring the accuracy and reliability of financial reporting in the sales and collection cycle. The second is understatement of sales return. An example of an understatement of sales return in the account receivable could be a failure to record valid sales returns. If a company does not appropriately account for valid sales return or fails to reduce account receivable for returned goods, it can result in an understatement of an account to receive balance. This means that the financial statement may not accurately reflect the actual amount of revenue that the company is entitled to, leading to a potential misrepresentation of its financial position. In such cases, customers might return products for various reasons such as defect, dissatisfaction, and others. And if these returns are not properly recorded, it can distort the overall picture of the company's sales and account receivable. This could impact decision making by investor, creditor, and other stakeholders who rely on accurate financial information. The third is misstatement in account receivable. For example, is incomplete recording of sales return. If a company neglects to record return from customer or fail to accurately reduce account receivable for returned goods, it can result in an overstatement of the account receivable balance. Identifying and correcting this misstatement is crucial for maintaining the accuracy of financial statement and ensuring that stakeholders have reliable information about the company's financial position.
For better understanding, let's take a look at the example question. This question is from the past year, July 2023. Now, let's move on to the question. Question 1 is to find the 5 deficiencies in the sales ordering system, and question 2 is the possible effects of the deficiencies. For easy understanding, I will show the answers in the table form. First, the inventory availability for the telephone orders is not checked at the time the order is placed. The order clerks manually check the availability later and only then inform the customer if there is insufficient inventory available. So there is a risk that where the goods are not available, order clerks could forget to contact the customers, leading to unfulfilled orders. Second, the telephone orders are not recorded immediately on the 3-part pre-printed orders forms. These are completed after the telephone call. There is a risk that incorrect or insufficient detail may be recorded by the clerk, and this could result in incorrect orders being dispatched. Next, the customers are able to place online orders which will exceed their agreed credit limit by 10%. This increases the risk of accepting orders from the bad credit risk. Fourth one is a daily pick list is used by the dispatch department when sending out customers' orders. However, it does not appear that the goods are checked back to the original orders. So this could result in incorrect goods being sent out. And lastly, the additional staff have been drafted in to help the two sales clerk produce the sales invoices. As the extra staff will not be as experienced as the sales clerk, there is an increased risk of mistakes being made in the sales invoices. This could result in customers being under or overcharged. And for the last question, the question requires 3 ways to improve the system. So the first one is all the telephone orders should be recorded immediately on the 3-part pre-printed orders form. The clerk should also double check all the details taken with the customers over the telephone to ensure the accuracy of the order recorded. Second, the 3-part pre-printed orders form should be sequentially numbered, and on a regular basis, the dispatch department should run a sequence check of the order received. Where there are gaps in the sequence, they should be investigated to identify any missing orders. And lastly, only the sales clerk should be able to raise the sales invoices. As SHA is expanding, consideration should be given to recruiting and training more permanent sales clerks who can produce sales invoices. And that's all for our group. Thank you.